We have reached quite a monumental moment in Module 9 on customs brokerage because this is the last section where we will wrap up by talking about working with customs brokers but measuring performance using key performance indicators. Like any business discipline, specific measures and KPIs should be in place for the CHB function: financial, operational, and customer service related. Some of the things we can be thinking about as we start out in our second bullet are measurements and KPIs that include, perhaps by quarter and full year, a QBR, a quarterly business review, and a year-end business review. Some basic stuff. Total number of entries. As an importer, how many entries did we have? How many by port? If we use more than one port is another one we can look at. Financially thinking, what was the total entered value for the period under measurement? How much did we bring in? What was the value of the merchandise? How much did we pay in duties? And shown separately, what did we pay in merchandise processing fees and harbor maintenance fees? Some other considerations, depending on the nature of our import business. Did we have any anti-dumping or countervailing duty payments to be made by product and quantity? Because anti-dumping and CVD cases change over time, this becomes significant for companies that are subject to those types of duties, meaning that a product that wasn't subject to anti-dumping or CVD now is, and we need to know about that. Here's an important one: the average cost per entry based on the service charges from the broker. We're talking about the services provided by the broker and how much they charged for them, and taking the total charges and dividing them by the number of entries to determine our average cost per entry. Did we have any visa or quota entries and the details on those? And as we see in our last sub-bullet, for ocean freight shipments, the number of entries cleared within 5 days, 4 days, etc., prior to vessel arrival. Because as we know, CBP allows for maritime customs clearance to occur 5 days out. Well, if we as an importer discover that our broker is only clearing our goods upon arrival of a ship, that adds time to our cumulative lead times, and that's a problem. We need to go back in that instance and fix that. One of the ways to do it is by measuring how many entries were cleared in 5 days, 4 days, etc. Some others. For air freight shipments, how many of those shipments were cleared wheels up, as opposed to waiting for the aircraft to arrive and then doing the entry? How many entries did we have with missing or incorrect documents? And by ascertaining those details, we can go back and work with the vendors overseas to make sure that they have the right documents and that they are correct. Any number and type of customs holds that we talked about, a manifest hold, an administrative hold, etc. Any instances of documentation review where customs came back through ACE and the document image system that we studied is requiring documents be submitted. Any partial exams, tailgate exams as they're called, or any intensive exams. We might find ourselves in a given period having 20 intensive exams when we only imported 50 shipments. That's a problem. If we can't measure that, we can't fix the problem, along with the costs and reasons for all of those intensive exams. Number of binding rulings achieved, unliquidated entries with supplemental duties owed, were there any protests filed in a given period of time? These are all important things to measure, as well as customer service measures, timeliness of return phone calls, responsiveness to emails, stuff that's harder to measure, admittedly, but that should be included as part of the portfolio of KPIs. We talked a little bit about local versus remote location filing. Let's talk a little bit more about it. One very important question that an importer must ask any customs broker is that of local versus remote location filing. As the names indicate, the local filing of customs entries is when a broker submits an entry from the port district to which goods arrived. Remote location filing, conversely, is a CBP program that allows brokers with a valid national permit to file entries from anywhere in the United States. Second paragraph. Both approaches have their pros and cons, and Mercado does not advocate one over another. On the other hand, local entries offer the advantage of port-specific expertise and in many cases a more personal touch. Not always, but oftentimes. On the other hand, RLF may be good for importers that bring goods into multiple ports and don't want to be dealing with individual operations in each market. Third paragraph. Another important consideration is how entry files are handled in either of these scenarios, local or RLF. Basically, the importer needs to ascertain if files are handled end-to-end by the same entry writer or if multiple people touch a file. While either approach exists for both local and RLF filings, some brokers operate RLF via large service centers that write entries for an entire region or the whole country, and sometimes out in the middle of nowhere in the United States, hundreds if not thousands of miles away from a port of entry. Last paragraph. In any of these cases, it is important that A, the importer know the method used, and B, that they are comfortable with that method. We're not here to say that local is better than remote location filing or vice versa. What we are here to say is that the importer needs to be cognizant of how the broker operates, be comfortable with that methodology, and then measure via KPIs that very same methodology. Let's talk about working with customs brokers, the service and billing structure. How brokers get paid for what they do. One very important aspect of a successful importer/broker relationship revolves around a clear understanding of the broker's service and billing structure, meaning what they do and how much they charge for it. Brokers sometimes take a different approach to pricing, and it is important for the importer to distinguish between pricing strategies, meaning what are they really paying for and in what amount. As a trade tip, and this isn't official terminology, it's just trade terminology, the basic difference in the approach to pricing for brokerage services is the all-in versus the less than flattering connotation of a laundry list strategy. Let's see what those are. The basic approach to billing for CHB services is a fee on a per entry basis. As an example, $75 per entry fee, which includes classification, entry preparation, and transmission via ABI to ACE. $75 might be considered a little low. It might be considered high by some people. It's just a number that is indicative of some entry fees that are out there. The point we're trying to make is that the fee is on a per entry basis. It could be 100, it could be 50, it could be 200. Depends on what is negotiated. With that said, second bullet, some brokers charge a higher amount and offer a flat fee where there are no other charges, allegedly. Conversely, other brokers offer a lower entry fee but tack on this laundry list of other charges. It's important for importers to understand how brokers think, what their philosophy is on charges. Is it a flat fee that might be a little bit higher? Is it a lower entry fee with a bunch of tack-ons? It is up to the importer to decide who to work with and how to negotiate those fees. We're just here to bring those approaches to light. Here's an important trade tip. The real key metric in understanding the CHB pricing structure is knowing the amount of time it takes to execute an entry. If a broker can do an entry in 5 minutes because they have an item master, it's a repeat import item, there's only a couple of items in the entry, literally that can take 5 to 10 minutes. If a container is coming in from a buyer's consolidation operation in Asia where there are multiple vendors and hundreds of different items in the container, that's going to take longer. It's all about time in terms of how brokers will price their services. The amount of time it takes to execute an entry is driven mostly, not entirely, by two factors. The number of vendor invoices in an entry. How many invoices are there? Second, the number of classifications that must be accounted for in those invoices, meaning thinking about the 7501 and the number of different lines that go in the 7501. If we bring in as an importer one thing with one classification, it's one line. Doesn't take long to do that entry. But again, if we have a container with dozens, if not hundreds of different classifications, the lines are going to be as extensive as the number of those classifications. This is why time is of the essence in pricing for customs brokerage services. Second bullet, multiple vendor invoices are quite common in an entry. They could be from the same or different vendors, especially multiple invoices in that buyer's consolidation container that we spoke of just a moment ago. Second sub-bullet at the bottom of the slide, the number of product classifications depends on the diversity of products in a given shipment, which is to say, products with their own HTS number. One classification in a container versus 100 in a container. It should be clear that the pricing offered by the broker is going to be a reflection of the complexity of the entry. Given the aforementioned scenarios, many brokers offer a flat fee up to a certain number of invoices and/or classifications. We have an example upcoming, but it could be a fee of $100 up to 10 classifications, and then after that 10th classification, it's $2 per line. That's an example of what we're talking about. We'll look at one visually in just a bit. In addition to invoices and classifications, brokers sometimes levy other charges. The first one is a duty disbursement fee. That's a charge for paying duties on behalf of the importer that we spoke of earlier. If a broker is doing the ISF filing for the importer, there's a fee for that. If additional work is required in working with partner government agencies and submitting additional information to these PGAs, there's a PGA fee for that. These are just a couple of examples, but that laundry list can get rather extensive. Trade tip. Importers should understand the unit of measure used by brokers when presenting their charges. Is it per entry? Is it per line? Is it per invoice? That's what we're saying when we use the term understand the unit of measure. How are we being charged, basically? This is a sample off an actual quotation, a simple one, but salient nonetheless, from a customs broker to an importer. This is an actual quotation. What is the service description? The customs entry with 3 lines. The unit of measure is the entry itself. The service fee is $75. However, it includes 5 lines, 5 classifications, and 1 commercial invoice. Anything beyond that, we'll note below, is an additional HTS line at $2 a line. Now, one might say, well, $2, that's not that much. Well, if there are 200 lines on an entry, and the entry fee is $75, but only up to 5 lines, now you're paying $2 per line. It gets pretty expensive. ISF filing, that's usually less expensive than an entry. It's not as complicated, $15. Any additional lines on the ISF is $1. PGA fee, $15, and an advance duty fee. That is where the broker is fronting money on behalf of the importer at 2% of the value. So if a broker fronts $100,000, the advance duty fee is $2,000. Admittedly, this is a simplified quotation from a customs broker, but very indicative of what is seen out in the marketplace. Well, here's everybody's favorite slide, especially in the longest module of the overall training program offered by Mercado. It's the end, where we always go over our objectives before we finish. First, we wanted to present customs brokerage as a vital function in a U.S. import supply chain. That should be pretty clear. We went to great lengths to demonstrate that. Second, we also wanted to demonstrate the importance of integrating inbound transportation with the customs clearance process. Not using the same company as a forwarder and a customs broker, but integrating the process itself. Third, provide insights into the regulatory component of working with U.S. CBP. That was 19 CFR, as well as HTS US. Enhance the student's understanding of the operational, documentation, and service aspects of clearing goods into the U.S. And then finally, we wanted to share operational and regulatory expertise that enhances the importer's knowledge of all facets of the U.S. customs clearance process and thus makes them more competitive in the marketplace. That's what we wanted to do. Hopefully, you'll be able to judge in a positive manner on all 5 of these objectives. That's it for Module 9. There's one left, Module 10, and that has to do with the on-forwarding of imported merchandise domestically out into the United States. Full truckload, less than truckload, and intermodal rail transportation. We're almost finished. Please come back quickly.